Wow, this is a good view.
That little island over there, that little small one.
Yeah.
That's Fremont Island. A couple local guys started this show. You heard of diesel?
Oh shit, tree! Oh fuck! Oh. Ha. Oh dang! Yeah, I think I got that on video. In my defense, she said I could use the footage, so pause off. And if you didn't recognize those two islands that I highlighted in the intro video, that was Salt Lake, and you could see the city right before was actually Ogden. Salt Lake City is a little bit further south of Ogden, and we were on top of Snow Basin, one of the ski resorts in the area. That's where I've been going quite a lot lately, which when you wrap up trading at like 8 a.m. Based on mountain time, it's not a bad deal. Unfortunately, it hasn't been snowing that much, so it's been a little bit icy. I was going to show one more clip where I'm literally going through what looks like powder, but it's frozen over powder. It was pretty miserable. Actually, you know what? I'll just show it right now. A little 5-second clip of it. Yeah, so that is iced over powder, and it is just, whew, it was heavy. It was so sketchy, and usually it's unfortunate because Utah has great powder conditions, but lately the weather has been like fluctuating around freezing and melting, so it's just like it'll melt lightly and then just freeze over again. So it hasn't really been the best ski conditions. But let's go to my P&L here and see what happened last month. And you know, if I just actually go on the monthly and then I hide some of these other things, you will see that last month, and this is this month right now, we're day number 3. Last month we are down $157 last month. That is my second red month since we switched to the unlimited account, which was in June 2020. That's when we wrapped up the 25K challenge, switched to the unlimited account, which is basically an account funded over $25,000, and we're day trading in that account. And then this was when we were having that really, really nice January, February, March action. And then all of a sudden in 2021, it was dead. I mean, the market was really dried up. I would say like December, we got a bit more action. Actually, October, we got a bit more action, but I did horrible trading because of all my traveling I did. You guys know about that. If you're watching my recap videos, I was like a zombie trading in hotel lobbies, and I was always exhausted, and that was a tough time. The trading was actually much better in October than January. January was just, there was no trades. We'll talk about that in a second. But for my day trading portfolio, we lost $157 last month, and it's a little depressing. I could have got back into the green easily. What I did was I sized down near the end of the month, and no matter how many green trades I get, I wasn't really able to make that much money back. But I did so bad trading in the beginning because I was going for moves that weren't there, and I was losing like, $1,000 here, $2,000 there, and I was like, you know what, I can't trade with big size right now in this lull, so I'm going to reduce my size. So I actually made back a lot of my losses. I just wasn't using big size. So I think I could have ended the month green, but I think I'm happy I sized down because if I dug a deeper hole, I think I would have been emotionally at a much worse spot. If you put things in perspective, and let's say we just go to the cumulative trading P&L and then we hide the nominal P&L, we're still in a nice uptrend, and for this day trading portfolio, I'm pretty happy. We are, just breaking $100,000 here. And if we add our swing trading portfolio on top of that, we've, broke it by a long time. That's our Roth IRA account. If you guys remember, I think it was sometime last year we did the $100,000 mark. And actually, let me go here to the day trading range and let me put in December so we could look at some more statistics here. Well, that was obviously not right. Actually, no, January, not December. What am I talking about? And we are in the portfolio. We're in the day trading portfolio. And what I wanted to do here, just kind of show you guys a little bit more of the insights. This is pretty, I didn't notice any big changes in my time performances. So 7 to 8 was still my best. 9 o'clock after the market opens, not my best trading time periods. It's going to be probably different this month because what I started doing is actually started sleeping in a little bit later, which actually erases the 7 o'clock. But lately we haven't been getting moves pre-market. They just don't exist anymore. It's so weird. So it's actually worked out pretty well for me. And plus, like, getting up at 4:30 has been kicking my butt. I did it for 2 months. In December, it worked out really well. In January, not so much. And then, I was just like, I was dead. I was really, really tired because we were going through the process of hiring a bunch of interns. I was working on the Florida Man project. So I was doing all these things and I was getting a little exhausted because, I would be trading in the morning and then I would be basically working till like 6, 7 p.m. And then, waking up at 4:30 again. So I was way exhausted. And I think that's why it made waking up at 4:30 so hard for the month. But so I think this is going to be a little bit different going forward for at least February, and then maybe we'll get back on track. But if you want to see my overall, 2021 and just overall stats, just check out my last recap video. That's when we review the whole entire, basically year and a half plus stats. Let's keep going here. Monday was my worst and Friday was my worst day. And we actually have a new rule because of this. I'll review in a little bit. So Friday was devastating. It was before a market holiday, or a federal holiday where the market was closed. This is just showing stats for June, January. So obviously that's not showing up. This is our day trading account. So obviously everything's going to be intraday, not multi-day. And then intraday duration, like always, everything below 1 minute, everything I hold below 1 minute is my bread and butter. And then everything else seems to be a bit of the red zone. Usually it's more of a chart like this, where this 1 to 2 minutes is like, a little bit more normal, a little bit more up here, but yeah, didn't work out for January. Let me actually show you guys the P&L calendar. This is the right one. Yeah, this is the January P&L calendar. And this is kind of interesting because we started the month off red, just boom, right away, in a nice little hole. I was able to dig myself out of the hole, and here we are up like almost $3,000 in profit, and then boom, in 2 days, I pretty much gave back all that, and I was down. On Friday, I was pretty upset, because on Monday, it was Martin Luther King Day, and I already wanted to take Friday off. I wanted to take this day off, so it was like a day where I should have taken off, and I was tired, I was exhausted. Thursday was the alarm clock incident, if you guys remember, where an alarm clock woke me up at like the middle of the night, and I just couldn't get back to sleep, and I was upset. And Thursday I was miserable. Friday I was miserable, and I wanted to take off, and I still traded, lost a bunch of money. It's crazy how there's some jobs where you can go to work and you can be fine if you're tired or something, but then there's like some jobs in this world, like trading or maybe being an athlete. If you are not 100% in your head, you might as well go back home, because you're going to make more mistakes that are going to cost you a lot, and they're going to have ripple effects. And that was pretty much Friday. And then I took the next 3 days off because there was no gappers. It was flat. It was like a dead person. It was just a flat line. There was no gappers. There was nothing tradable, and the overall market was just selling off. This was insane. And then finally we had a little bit of late day opportunity. Actually, I think I missed one on Wednesday or Thursday. But I started getting back into the groove a little bit. Obviously, it was smaller size, but it wasn't enough to dig me out of the hole, and that's why we ended the month red. So yeah, if I didn't size down that much and I maybe traded a little bit more, who knows? I could have had a green month, but I don't really care if I'm going to have a couple $100 green month or a couple $100 red month. That's not really what I care about. Clearly, something is fundamentally wrong with me or that month in general. So better just to lock it up and then move on from that. Another thing I want to talk about is the running P&L. Now this one, let's see, actually let's click on January. Yeah, this is January. Now what I did in January as well that really messed me up pretty hard was I would keep on trading after, let's say, I nailed some sort of front side or I got, some good range trades. I would keep on trading, waiting for that second phase of opportunity. And oftentimes what I did, I would just give back all my profits. So what I want to actually change going forward for at least a little bit until the market maybe really heats up is, and I've had this debate thousands of times on this channel, and I think, I think I just got to do it. Once I nail some sort of front side, some sort of good trade, and I'm up over like, let's say 5% on the day based on my average position size, I just need to take my profits and walk away. I'll work less, and I don't have the statistics to back this up, but I'll probably make more. So working less, making more. Let me give you guys some examples here of the running P&L. So there's many times where I would trade, and then I would just give back all my profit. So this is a good example right here where I was up, let's say $1,700, and then I ended up the day $300. I mean, how silly is that? Why did I not take my profits and walk away? I probably nailed a decent front side, and then I was like, oh yeah, let's keep trading a little bit more, and then I just, the rest of the day give it back. Look at here on the 12th, similar situation. I was up like $900, ended the day $45 or $100. This happens to me quite a lot where I'll just look at the market for too long and then I'll do something silly. So I think trading 3 hours per day might be a little bit too much. I don't know. Not always, but I do give back profits a lot. And this is not a problem exclusive to this month. It's just I kind of always want to trade till after the market opens, till 10 o'clock or maybe a little bit longer. And then, if I start trading at 7 a.m. Eastern Standard Time, that's 3 hours. And I feel like kind of silly when I stop trading at like, let's say 7:45. So I'll sit there like another 2 hours. And, sometimes you get that second leg or second front side or a new ticker and you can make, much more money. But oftentimes I just I'm a little bit tired mentally. My brain starts thinking about other things. I start maybe working on another project on the side, and then I'm just not dialed in anymore and I start giving back profits. So I think honestly going forward, if I could just nail any sort of move and make some decent profits and really just put all my energy into that one session and then walking away, I think that's the best on how I want to go forward. And looks like I don't know, I scaled this wrong, but now everything's rescaled nicely. So keeping all those things in mind, I came out with or updated one rule and came out with one new rule. The first rule is no more trading the day before a holiday. And if you guys want a full video about me explaining this rule, I have it right here on my portfolio. I'll link it in this video. It says why I won't trade holidays anymore. And it's not necessarily trading the holiday, it's the trading the day leading up to the holiday. So Monday was a holiday, so it's a 3-day weekend. We have Saturday, Sunday, and Monday off. So what I'm going to be doing is basically making 4-day weekends out of every 3-day weekend. So I would have took Friday off there. That means I would have had 4 days to really chill and relax, not have FOMO, not deal with low momentum around holiday weekends because other traders are already taking off, and then being really rested and being able to hit the ground running. So that's why I'm doing that. And another example, let's say Friday was a holiday. That means I would be taking that Thursday off, if that makes sense. So always taking 1 day before the 3-day weekend off. And the second trading rule, which is if we go to my day trading portfolio, will probably make a lot more sense, is my max loss update. So what I mean by my max loss update is, hopefully you guys can see these numbers, is my average position size. That's really what everything boils down to. Right now is around $7,000, which is not a lot. I want it to be over $10,000. So I'm shy of that goal right now, which makes sense because the market wasn't that hot in January, so I sized down. And my rule is when I'm down 10% based on my average position size, I am not allowed to trade anymore. And I'm not, and this is the updates part, I'm not allowed to trade my hypothetical ideal average position size. So lately, my max stop on the day was $2,000 because my average position size that I wanted to get to was $20,000. So 10% of $20,000 is $2,000, and that's why $2,000 was my max loss. Now it's always going to be 10% of the month, whatever the month is. And if it's like new on the month, then I'll just use last month. That's probably the easiest. And then I round it. So let's say this would be technically $700 because $7,000 times 10% is $700. But then I'm going to round that up and then I'm going to make it $1,000 just to keep it steady because I'll probably keep trading if I'm at $700. But that $1,000, that's my max loss. So if I did that, and we just go back to my calendar, based on those two rules, let's see how this month would have changed in retrospect. So we would have not traded this day because it's the day before a 3-day weekend. And then this loss right here would have stopped around $1,000. So instantly we'd have pretty much $2,500 back in the bank, and January would have been a green month by doing less. How crazy is that? So those updates aren't really that big. First of all, one rule has already been there. I'm just being more disciplined with it. And then the second rule is something I've thought about for a really long time. And what I've noticed going close to 2 years now, full-time trading, is less is oftentimes more. And in the beginning, you want to be consistent. You want to show up every day. You want to try a lot of things, but also be really focused on one main strategy. But at one point, if you recognize it's not a good day to trade, I mean, it's a good day to take off. In the beginning, you don't know what a good and bad day usually look like, but as you become a more experienced trader, it's easier to identify what a good day and a bad day look like. And that's why doing less is oftentimes more. You want to be, I think Tim Sykes says this, you want to be a retired trader. So you only want to come out of retirement if there's that perfect opportunity. I think that is making a lot more sense the more you trade. Some simple thoughts going forward is, patience, key, always has been. Something else I want to start doing is start sizing up into tickers that I'm in a flow on. Some days like today, I forgot what ticker it was. I just was absolutely not in the flow on it. And the more I traded it, the more I lost money. So those are days and those are tickers that you don't want to be sizing up. But if you're making some traction and you have a really good read on a ticker, that's when you want to go from like $5,000 average position size to $10,000 to very quickly like $20,000 plus $1,000 position size. And that's how I'm going to get my average position sizes up by basically trading the bad stuff less, being patient and waiting for that good stuff. And then, so I don't give back profits, if I have that nice front side and I just traded it for 30 minutes long and I'm doing good, I should probably call it. Even if I only traded 30 minutes, like that's it. I just did a really good job. Why sit around another 2.5 hours and maybe just give back profits the rest of the day? It's frustrating, it's exhausting, and it's costly. So those are all things. And then with the backside, I really only want to be trading backside large caps. We'll talk about my trading strategies in a second here, but backside is just always one of my worst strategies. But lately in February and the end of January, it was actually one of my best strategies, but only on large caps. So keep that in mind. So let's actually explore that a little bit, the trading strategies. And what we're going to do is we're going to dive into my 3 go-to setups. So we have the front side, and then we have the ranging, and then we have the backside. Let's go ahead and start here with the front side. And this is just for January. This is where I made most of my money. I did 208 trades here. I made $12,000, but I gave back $10,000. So my profit margin isn't really that good, 17%. Usually my profit margin for front side is like over 30%. So I did not do good front side trading. I didn't do any really good trading last month. So it's definitely frustrating. Total winners pretty good, but I had some pretty heavy losses. I think this was the hold that I got stuck in. I took a massive loss on that hold. It was just so frustrating. So yeah, I really didn't do that well last month, but there just wasn't really that many opportunities either. So let's actually review these 2 largest winning trades. And these trades are unique as well. So 4 trades, two largest winnings and 2 largest losing. Let's go ahead and look at that. We have EAR. Now I'm not totally sure where my largest profitable trade is on this one. Let's see here. 851 till 856. Let's look into this. Boom, that's obvious front side. This is the front side right here. This is the range. You guys can tell we're stuck between this resistance and this support around $8. And then this is the backside. It's that simple. Stocks do either 3 things. They go up, they're stuck in a range, they consolidate, or they go down. That's it. You just got to know what your ticker is doing and you got to trade accordingly. And if it tickers on the front side, so this was like around 840, what you do, or what I like to do, is buy these pullbacks and look for those breakouts. I never hold long enough, but that's what makes me the most money, because this is when you can, in like 1 or 2 minutes, you can make 5, 10, 15, 20, 30% in one trade. It's absolutely crazy. On the backside, you hold for the breakout, it's breaking to the downside. That's why backside trading is so tough. Now you could do dip trading and stuff, and that works sometimes, but it's hard to do with small caps because they sell off so aggressively. So yeah, no wonder this was my best trade. I mean, that's so obvious. That's a beautiful setup. PSTV, looks like this was my biggest percentage trade. Let's go ahead and look at this one. So I didn't size in as much as I did on the other one. Yeah, this was only a $7,000 trade, roughly 6.7. This was at 755. Let's go ahead and take a gander on this one. Yeah, 755. Yep, this is on a front side crawling up. I mean, look at that. Perfect. Oh, that is so nice. I think I took profits too quick on this, but that is a perfect trade. Really, really nice. On the 5-minute, kind of intense because we have this big aggressive pullback. We do hold our highs. We start crawling back up here, and then we have this big double top breakout. So pretty interesting 5-minute candle. And look at this on the daily, you can see that this is a mega support and resistance zone that we broke out of. So when we broke out of that zone, it was no joke. It was strong support and resistance that was broken. Okay, so let's go to some of our biggest losers. So this ticker is for 8 o'clock, 8:08. Let's go ahead and zoom in on this big loser, 8:08. What happened here? Let's see. That's right in the beginning. Oh, wow. Yeah. Okay. I bought this pullback. It failed and just continued selling off. Yeah. So front side, you got to watch out. If a ticker is no longer on the front side, it reverses quick and you get whacked hard. So that was not the best move here on my end. And, on the 5-minute, definitely a little extended near big time resistance. So probably not the best trade overall. But I got to say, this is kind of a tough one because this front side was so short lived. That's kind of gross. And then, I don't know, this slow crawling action also just not that nice. Let's see when this last trade is. This was at 9:40. Okay, 9:40. So this front side, yeah, this is the halt. This was so gross. This ticker halted up, pulled back, I entered, and it started crawling up again, and then it, didn't make it, and then started selling off. I actually even bought a little bit more, and then whack, 20% down. This was a devastating trade. I made back some of my losses here trading this rangy backside, but this was horrible, and this is why I don't trade halts. But at the same time, I made a video a couple days ago where I want to trade halts a little bit more because I think my problem is I don't trade halts for weeks, and then randomly I'll trade one halt, and that's the one I lose a bunch of money on, and then another few weeks go by, and then I trade a halt again, and then I lose a bunch of money on the halt again. So I think if I want to get better at trading halts, what I need to do is I need to trade every halt with very small size, so it doesn't really matter what happens, and I just need to work on gaining experience. But yeah, halts historically have not really been my thing. Okay, so let's keep going here to the range tickers or range strategy right here for January. This one didn't go so well for me. I made 4,000, but I lost 5.7. Negative 40% profit margin. That's not really good. Average win, average loser is usually a little bit tighter here because you're trading the range. So usually you don't get caught in a super mega flush unless you're, buying high in the range. Then that's a little risky. Yeah, size could be a bit bigger, but that's fine that it's a smaller. Total winners for range trading is never that good for me. Like with front side trading, you'll notice that my winners are usually they're usually almost always over like 66, 67%. But and here it's 72%. But when I trade the range, I don't do a very good job on it. Let's actually look at some of these tickers. So these two are the same. So my largest winning dollar amount and percentage amount are the same, but and the largest losing are also the same. So only two trades to review here. Okay, so let's start with the largest winning trade, and let's see here what we got. This was at 9:30 a.m. Let's look at the picture. Okay, yeah, this is pretty good. We have big support around here and resistance around here. We got rejected. I started accumulating for a potential red to green move. We popped up, and it looks like I took some profits. It looks like I took profits a little bit too soon, but hey, made a quick profit on the range. That's never too bad. And then here, wow, huge loser. Oh God, what's going on here? 8:41 a.m. Not the best time to probably be trading. Yeah, this is bad. So yeah, this is pretty obvious what I did wrong. And if you go to the 5-minute, it's probably much easier to decipher this one. Basically, you see this huge sell-off right here. So this ticker, if you look to the left, when we're trading here, it's notorious for selling off. So not usually the smartest ticker to be trading, especially near the highs. So this ticker extended here on a backwards, maybe a backside, maybe a range. It really depends what you want to call it. I called it the range because there's support here and resistance. I don't know, maybe here, a little bit aggressive. I bought and I got flushed in so hard. Wow, that is devastating just to look at. And yeah, you can see on the 5-minute there's big time resistance here as well. So this ticker opened up, broke back up, but never really was able to maintain that. And oftentimes when I have such a big loser like this, my brain doesn't work anymore. I just can't properly trade. I'm instantly in this defensive, I don't want to take another loss mode. And what I do is, even if I have a green trade, I'll take profits and make $50. Which is nothing. It's kind of a scratch, even though I could have made $2,000-3,000 if I just held a little bit longer, because I'm just so worried about taking a loss, and it's not a healthy place to be psychologically. So Yeah, not very fun. Well, let's actually go to the backside here. Let's see what's kicking on the backside. What do we got? Okay, so here I made 800 and I lost 1500. 711 is what I ended on. Profit margin negative 84. Yeah, backside. Better if I just don't do it backside. Total winner is actually okay, but the problem here is just my average loser is just, pretty high. And that's the problem with backside. This literally sums it up. When you trade backside, a ticker is selling off, right? So it's literally the opposite of the front side. So what you're doing is you're trying to buy that dip and looking for that little pop, which is like 2-3%, and then there's another breakout to the downside, which is like a 5% or a 10% flush. So the profit potential, the risk reward is always negative. It's a negative strategy, and that's why I feel like for me personally it works pretty well with large caps, because they're slower movers and they kind of curl a little bit more healthy, and they're just easier to edge into. I've been doing it a lot lately with a lot of these meme stocks that have been bottoming out, and it works. But with small caps, it's just those like 10% flushes. If you get stuck in those just a few times, it's just devastating, and that's clearly what happened on a few of them. So let's see here. These two are two different trades. So let's look at that one. Let's look at the largest winning trade. And this was at 120. Okay, that's pretty late. What am I trading so late for? Okay, so this, this is, boom, this is a large cap. Bottoms out, I start buying a little bit too soon, but it's fine. I hold a little bit longer. I cut here for, break even, and then I sell the rest over here. So yeah, this is a classic large cap where I'm trading the backside. They just behave much nicer. They're just, they hold these support and resistance zones nicer. They bounce nicer, and they're not flushing 10% on you. So you do have to size up a bit more. I mean, this is huge size I'm using, but I just feel like it's a little bit more readable. Let's keep going here to this trade. This was at 9:44 a.m. So let's look at that one. That's right here. So yeah, this is SoFi, actually another large cap, and this is the one I make a decent amount on. Not really too much, but okay, I make a little decent amount on this one. Yeah, look at that backside. This is actually, I think on the 5-minute maybe, or maybe the daily, there was bigger support here. So I took this trade, took profits right away. And you can see I did this trade a few more times. This actually didn't end up that well. I should have traded, look how perfect this pullback is. Yeah, I should have traded that one. But yeah, this is a little bit past my normal trading hours, and that's when I get a little bit loopy in the head. So no surprise that I didn't do a good job there. And wow, look at this pullback right here. And then look at that on the 5-minute. That's right here. That's a perfect pullback. Oh my God, that's nice. So wow, hindsight's always 20/20, but that would have been a nice one. I think I was red on the day on that last trade already. So mentally, like I said, if I'm red on the day, sometimes I'm just instant. I can't do anything right because I'm too worried about getting further in the hole, and I'm not focused on the price action in front of me. So let's actually look at the largest losing trades, which seem to be the same for dollar amount and percentage. Let's see, EAR. Oh, this was actually our largest winning on the front side. You guys remember that? It was EAR. Yeah, right here. So it was the same ticker. Okay, let's look at this. This is going to be funny. This was at 9:33. Okay, it's a little bit after the market opened. Oh, this is hilarious. This is exactly everything I've been just talking about. We have the front side I make all my money on. We have the range where I lose money on. And then we have the back side where I lose the most on. And then the longer I trade, the more money I lose. It's like everything is in this one ticker right here. Oh my God, it's freaking hilarious. Okay, well, 9:34. Let's see here. Let's see, 1, 2, 3, 4 minutes after the market opens. Looks like I bought here looking for maybe a reversal, maybe a pop back above. Doesn't happen, and I close probably near the low of this one, and that's just absolutely devastating. Or, I only close some, and then I close the rest here. Either way, this backside ticker did not work at all. No surprise. And look how this ticker behaves going forward. It's just disgusting. This is why I don't trade backside or range usually. It's just it's a slippery slope for me. So yeah, guys, there you have it. January in review. I hope you guys found some value out of that. And I would love to know what you guys are doing going forward, especially in this kind of lull of a market. I know some people are checking out large caps a little bit more, while others are just sitting on their hands and waiting for the market to heat up again. And I think I'm doing a little bit of both of that. Like with it, when it comes to small caps, I'm really being chill right now, not trying to do anything too much. And also trade and manage my swing trades or large caps or intraday these large caps a little bit more. And that's actually how I made most of my money on Wednesday, so yesterday, by just buying these bottom bounces on these backside large caps, and it's been working pretty good. So maybe I got to pivot a little bit longer here. Hopefully the market keeps heating up again. You never really know. It's always a bit of like a waiting game. But yeah, if you got some value out of this video, I really do appreciate any likes. Easiest way to support the channel. And if you're totally new and you want to learn more, consider subscribing. We would love to have you part of this community. Till next time, guys, stay safe and make some awesome trades. Ciao, ciao.